Alright ladies and gents, it's Timed Edge and I'm doing a quick video on how I determine my daily bias. A friend has actually asked me to do a quick video on it and I thought I may as well upload it to YouTube, maybe it could help others as well. I try and keep my how I profile the daily candle pretty simple. It's all to do with the close above highs and lows, basically previous day's highs and lows, and what's expected, what becomes targeted. So let's start here, right? If I'm looking at this daily bar here, and then this is what I would call a range daily profile. Three out of the three assets are put in a range, right? Close within, nothing's closed outside of the previous day's range. Okay. So then I'm looking that determines one set of confluences, right? But when I'm looking at a daily profile that is bearish like this is what I'd call a bearish daily profile because we've had a close below this low and two out of the three assets have closed below as well. So if you trade the way I trade with this would be the currency futures triad 6E, 6S, 6B. So I use them closely correlated assets to give me influence in the market, right? So for me, profiling the daily profile would be I need two out of the three assets to close below. Okay. So if I do get something like this and all three assets have closed below, my expectation is that going into the day, if London opens like this, we run up like that, the price probability setup would be to take this low here. Okay, so let me just run through open, high, low, close theory. Right, we should open, high, low, close. Bearish bar. Okay, that's how a bearish bar would print. Let me just show you how a bullish bar would print. Obviously, in reverse, right? So open, low, high, close. Bullish bar. So I'm using open, high, low, close theory to predict what I'm seeing on the market. Basically, my theory and thesis is derived from predicting the next daily candle, and that's where I found my edge and profitability with days theory, sequential SMT, and CRT as well. But Romeo goes on about this as well. I've read a lot of books, Larry Williams, Short-Term Secrets to Trading Success. Okay, and it's clear that most futures traders will look at the daily bar to predict what's coming next. They base a lot of their technicals off the daily market. So with that in mind, I want to keep in mind with what everyone else is seeing, and that is why I trade the future market, not CFDs, because most professional traders will be using futures as a data feed. Okay, so yeah, with that in mind, right, this becomes targeted low. I've closed below here, right? The next, that would be a targeted low, and then you'd have to look for higher time frame fair value gaps, or however you determine your targets or narrative for the market is completely up to you. If you look for the way I do, it would be previous day's low or a standard deviation or something like that. And if you see here in this impulse leg here, we've got price closes above, right? Where would the next target be? It would be bullish daily profile. I'll be expecting a bullish daily close. Okay, close above, right? We don't get the one in the next candle bullish because you've got to realize where we are in the overall time frame, right? Something I did want to just quickly run through as well is what to expect in a trending market. So if you see here, we're starting this bullish trend. It's quite clear. Okay, we've taken liquidity over here, We've had a high volume candle to the upside. We get a range daily close here, range daily bar, right? So what's that? Is if you're in a trending bullish market, 2 to 3 candles will more than likely be engulfed. Okay, so if you're looking at this and we print 2 candles bearish, right, it will more than likely be engulfed. So we've got one here, wick below here. I think we get SMT, the sequential SMT, you can see, right, and then we trade up until 2 new highs, take these highs. That would be your target. Okay, so that's another indication of how I predict the next incoming daily bar. Also, I wanted to talk about something, the 2-period rate of change. This was made in the 60s, and this is something you should really be paying attention to, because it's how all markets work, and you can clearly see that's why you would only suspect a pullback to be 1 to 2 unless we're breaking out of a consolidation zone like this, right? You can see here we've got the breakout, and then you're expected 3 to 5 candles until you see a pullback. And you can go back and back test this. I've tested it myself. It gives you a clear idea of what the market's going to do and what to expect in the next bar. We know we're only finding the highest probabilities in our favor. Okay, we're trying to stack that in our favor when we're looking at the market. Nothing is dead certain. So that's why I resonated with trying to predict the daily bar, because I knew if that closed like that, what's the next daily bar? Oh, wait there, let me just come off of that, sorry. Right, I expect a bearish candle, right? So with that in mind, we go up in London, create the wick, and I'm looking for lower prices. But that being said as well, Romeo will, he put me onto this, but I've read a lot of books since then, Street Smarts and the Larry Williams, and I'm going through others just to really refine this, because at the end of the day you're only getting regurgitated information, you're not getting it from the source. Okay, so that's why it says wick below, close above to 50%, and then to the other side of the candle. Okay, so because if we're putting in a bullish candle here, open, low, high, close. Okay, so that's how we'd print. So if in London we take out previous day's low, we'd go higher. So that's also a determining factor on how I would profile the daily market, on how I would see that what the next incoming bar is. Open, high, low, close with change in state of delivery. I want to see change in state of delivery. That, what I class as change in state of delivery, is a full body close above the previous day's high or low. Okay, like this, like this. 2 out of the 3 assets if you're trading like I trade. If not, then obviously you're just required on one. Right, here we go, close above, close above, close above, higher prices. Okay, close above, didn't close, but you get the theory. I'm hoping that would help you. If you have any questions, please leave comments, and I'll try and get back to you. All right, thanks. Timed Edge.